Hello investors, welcome back to your number one place for all your investing needs. So today we're going to be discussing the top 5 stocks to buy for the month of July. Now obviously these are stocks that are currently at a good buying point, which we're going to be taking advantage of during this market recovery that we're currently in. The market is bouncing a little bit, as they're saying, a kangaroo market. We're going up and down. So let's take the opportunities and look into these stocks. Now, before we get into the list, guys, can we get over 250 likes on this video? Go ahead and smash that like button for me. Also, leave a comment below. What stocks are you looking to buy in the month of July? If you guys want, check out the links in the description. Get 2 free stocks when you sign up for Webull, or 1 free stock when you sign up for Robinhood. Also, if you guys enjoy this type of content, go ahead and press that subscribe button. Subscribe to the channel for more content like this in the future. And without further ado, let's get into the countdown, guys. Alright guys, so the number 5 stock on our list is going to be ticker symbol FB, which is Facebook. So this is an American social media conglomerate corporation. Obviously, Facebook has been doing great. Facebook is currently trading at $227.07. It's up about $6.43 today, or about 2.91%. Now, what happened with Facebook is right here, it was trading at around $245, went down to $235, and then right here, what's been going on lately is a lot of companies have been pulling advertisements from them, like Coca-Cola has done it, and a couple of other companies are also joining them as well. And the stock went from about $235 all the way down to a low of about 210. It was actually at a low of close to $200 per share yesterday, or Monday morning at the open. But the stock is already recovering from that low, and it's currently at 227. So every time a stock goes down dramatically, it's always going to come back, obviously, because it's just a dramatic drop, and it wasn't supposed to happen for no reason. The market is overreacting, or the investors are overreacting on that dip. Now with this one, Facebook does not have a dividend, so that's not something we're going to be looking at all. But they do have a market cap of 629.12 billion. If we take a look at their valuation measures right here, let's take a look right here. So market cap, if we take a look, 2019, this is on June 30th, 2019. Market cap 550.92 billion. 3 months later, 508 billion. And then at the end of the year in December, it was 585 billion. Beginning of this year, so March 31st, 2020, 475.55 billion. And then if we look at the current, it's at around 671.48 billion, which is not bad at all. Now, if we look at their forward PE, it's usually trending around that 20 mark, and currently it's at about 32, which is not too bad actually. But Facebook, one of my favorite tech stocks, I guess you could say. They have a lot of room to grow, especially with the market shop that they opened up recently. Facebook is a great stock to invest in for the long run. One of the best social media platforms that they have out there. Mark Zuckerberg is a great guy, and he has a lot of potential with Facebook, obviously, to continue to grow in the next 10 years from now. As we can see, this stock has been destroying it. I mean, it was down here at what, 23, $24, in 2012. Currently, it's over $200. Facebook has a lot more room to grow, and that's why I'm keeping this one on my list. And actually, just to be more transparent, I actually just bought 2 shares of Facebook to my portfolio and added more to the portfolio, and I am going to continuously add more whenever we have dips like we did this week. Next up, number 4 on our list is going to be Simon Property Group, and the ticker symbol is SPG. So this is an American commercial real estate company, the largest retail real estate investment trust, and the largest shopping mall operator in the U.S. So this one is trading at $68.38, up about 25 cents, or about 0.37% today. Now, if we take a look, obviously this stock is down. It was trading at around what, $144 before the whole Rona situation happened. Went down to a low about $48, $46. Currently trading at around 68. It made a high here about 95 and then pulled back down again. This one, with everything reopening back up, obviously, I think it's a great buying opportunity for this stock. If we take a look right here, their dividend rate is $5.20. The yield right now says 7.63%. With a market cap of 20.83 billion. If we take a look right here at their dividend, obviously dividend score, it's about $1.30 per quarter. If we take a look at their dividend yield, 4-year average yield is about 5.27%. So right here, as we can see, throughout the years, has been staying consistent about 3.5%, 5% dividend, and then now we have this huge increase. Obviously, with the market, it's all messed up. If we look at their dividend growth, years of growth, they've had 10 years of growth. So the company is, slowly beginning to get that growth and continuously, increase their dividend year from year, and it's currently at about $8.30 per share. Their dividend history right here, obviously been increasing. It's a quarterly paying dividend, currently paying out around $1.30 per quarter. Dividend safety payout ratio about 50.82%. If we go ahead right here and look at their valuation measures, right here in June 30th, 2019, it was the market cap was 49.36 billion. Next quarter 47 billion, 47 billion. And then this year, obviously with the market crash, it went down to about 16.77 billion and currently almost at around 20 billion. So the company still has plenty of room to grow to get to their average of about 40 billion. So, we have more than 50% opportunity gain to go. The forward PE is actually, pretty low, but it's staying actually around the price that it was in the past, about 24, 21. It was at a low about 8 here at the beginning of the year. But Simon Property, definitely a stock to keep on your watch list. Obviously, I mean, they have a decent dividend plus a lot more buying opportunities. So this one is a great pick to look at. The number 3 stock for July is going to be Enphase Energy, ticker symbol ENPH. So this is a NASDAQ listed energy technology company headquartered in California. Enphase designs and manufactures software driven home energy solutions that span solar generation, home energy storage, and web-based monitoring and control. So Enphase Energy, last month we talked about, Sunrun, which is another solar panel company. Now Enphase Energy, one of the probably best companies for solar panels and, reusable energy like that. I love this company a lot. I actually traded it here when it was trading at around like $20 actually in 2019 and early, 2018. The stock ran up to about $50, $60 up here, and I remember that I sold out, and then it took this dip, and now it's, it made a high up here about $67, $68. Obviously, they had some scandal going on recently, and that's caused it to pull back from about $65, $67 all the way down to about $47. It was at a low about $39, which was a great buying opportunity in my opinion personally. Now, this stock doesn't have a dividend or anything, but obviously with California and many other places going to, requiring solar panels on your houses, this stock is a great stock to keep an eye out on, and I think that they're, in competition with others. They don't really, I think they're number one in this field right now, and they have plenty of room to grow. They're selling out every quarter, killing the, the revenues. If we actually take a look right here, they have a market cap of 5.94 billion, currently trading at $47.57, up about 12 cents today. If we look here at the market cap, June 30th, 2019, 2.21 billion. Next quarter, 2.72 billion, so an increase of about half a billion. The quarter after that, another increase of a half a billion, and then the quarter, after that, another increase of a half a billion. And then currently now from that March price, it's went up about almost 2 billion, 1.7 billion increase at that 5.73 billion right now. This stock is amazing in my opinion, and they have plenty of room to grow. They're still growing. Sales are through the roof, and they're making lots of profit. I'm really curious to see what's going to happen this quarter. Obviously we had the, lockdown, so I don't know how that affected the stock, but we're going to see during the next quarter. And if we do have a good buying opportunity with a dip, I'm going to continue to add more, obviously, because in the long run, I see the stock reaching $100 per share, in my personal opinion, obviously. So Enphase Energy, another great stock to look for. Coming in at number 2, one of my favorite consumer companies right now is going to be BJs Wholesale Club Holdings. So this is an American membership-only warehouse club chain. So BJ's is currently trading at $37.27, down about 60 cents or 1.5% on the day. Now, the thing I love about this stock is obviously with the, the shutdown and all, people are going to the stores and they're buying in bulk, and that's what BJ's is all about. So, as we can see here, last quarter, I mean, they jumped from $28 all the way up here to about $37. That's over, almost a $10 jump right there. That is huge for the stock like this. That's over a 30% gain right there, after the quarter, reported the earnings. This stock is amazing, I think, because Americans are going out right now. They're stocking up on supplies, stocking up on food, beverages, everything they can pretty much get, and that is a great thing for companies like this. Sam's Club, BJ's. They're profiting a lot right now because people are just buying in bulk, and that's helping their revenue and their growth. So this stock, I feel like by the end of the year, it's going to be trading at around $50 per share plus. Um, Really good buying opportunity right now, in my opinion. They do not pay a dividend, so no dividend from this company right now, but they have a market cap of about 5.25 billion. If we take a look here, April 30th, 2019, almost a 4 billion market cap. 3 months later, 3.22 billion. After that, 3.65, 2.82, and then during the pandemic right here, 3.64, and currently it's almost at 5 billion. Valuation. So it's valued now more than it was ever before, which is amazing for the company. The company is doing amazing. Their forward PE is actually sticking around the same as before, so it's not overvalued. It's not too much. The forward PE is not too high. It's still around 15, and it's usually trending around here about the 16 area. So BJ's Wholesale Club Holding. Great stock to look at. Obviously more great opportunities, especially if we get a second wave, or if this continues to happen, because people are going to be going out and buying more in bulk, which means great things for BJ's, and the stock price should keep going up as long as we're making a lot more profits and a lot more revenues. This company is in good hands right now. Coming in at the number one spot is going to be ticker symbol TWTR, which is Twitter. This is an American microblogging and social networking service on which users post and interact with messages known as tweets. Registered users can post, like, and retweet, but unregistered users can only read them, obviously. So Twitter, this one might catch you guys by surprise, but Twitter, they have a lot of opportunities. Obviously, they're doing great, and I think that they have more growth and a lot more opportunities if they did things differently with the company, which they could be doing in the future. Who knows? But this one, I think it's still undervalued. This company is undervalued. I mean, right here, if we look, it was trading at around $45. At the beginning of last year, or mid last year and last year. The stock dropped down here to the current prices actually that it is right now. Stock ran up all the way about $38 before the pandemic happened, and then dropped all the way down here to about $22. So it's only halfway recovered right now. It still have plenty of room to grow. It was here trading at around $36, maybe about a month ago, and now it's pulled back down about $6 or $7 again. So it has plenty of room to grow back, to continuously grow back. Currently trading at, as we see right there, $29.79, up about 30 cents, or about 1% today. This company does not pay a dividend. They have a market cap of 23.09 billion. If we take a look here, June 30th, 2019, 26.83 billion, and then 3 months later, 31.96, and then 24.99. Obviously here with the crash, when the crash happened, it was worth about 19.26 billion, and currently at 22.79 billion. So it still has plenty of room to come back, to grow. I think that this stock is definitely about a $45-$50 value stock currently, and I think that Twitter can definitely come back to those prices. As long as they continue to do the things that they're doing, and I think that they could do even better the way they're doing. I think they can move further and try to compete more with social media like Facebook and stuff like that. I think Twitter could do a lot more, and better things for us, and they have a lot of growing opportunities, is what I'm pretty much trying to say. And with growing opportunity, obviously that means that the stock and the company itself is going to grow, which means that we could get more revenue from things like advertisements and other things like that. They could do a lot more things differently. So those are the 5 picks, guys, for the month of July. Obviously, we're going to be making weekly updates on other stocks that we're going to be looking at through the month of July. So stay tuned for that. Make sure you subscribe to the channel so you guys can get updated on all the content that I make in the upcoming months. Obviously these 5 stocks that we picked, they have great buying opportunities. The stocks like Facebook, they have, when a stock takes a dip and it's an overreaction, it's a great time to buy more and, ride it back up to the prices that it was at. I believe that Facebook has a lot more room to grow, obviously, as, they're doing the marketplace and other things. Even with advertisers being pulled, I think that the company's still making great amount of money from other companies. So that's not, shouldn't hurt them too much. They have many other things going for them. And Phase Energy, obviously solar panels, as we're trending to that, green energy, as you could say. Great buying opportunities for a lot of these stocks. So leave a comment below. What do you guys think about these picks, and what picks are you guys going to be picking for the month of July? Smash that like button. Let's get over 250 likes on this video, guys. It helps the algorithm, and I'll really appreciate it. Also, leave a comment below letting me know what you guys would like to see. Do you guys want to see more of these top 5 stock videos, or what do you guys want to see? Don't forget to check out my other content. I also make videos on penny stocks, dividend, passive income that I received, actually the last upload. If you guys want to check that out, I show you guys how much passive income I received from my dividend portfolio in the month of June. So go ahead and check that out, and I hope to see you guys next time. Goodbye.